Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update. Currently we're sitting at 4/20/2022. So the mortgage rate update, it's actually gotten a little bit better. It's not bad, but I always reiterate in every single video, make sure you always lock your rate, because the last week, from this week to just yesterday, sometimes it goes hours by hours. But let's get on with it. We're going to be pricing out 5 different mortgaging products. We're going to have a 30-year fixed, a 15-year fixed, a 30-year FHA, a 30-year jumbo, and a 5/1 adjustable rate mortgage. If you don't know what a 5/1 adjustable rate mortgage is by now, it is a fixed interest only for 5 years, then adjust every single year after that according to the cap on your product. So 30-year fixed, we're sitting at 5.27%. That is 0.08% better pricing than just yesterday. 0.28% increase from 1 week ago, 0.81% increase from 1 month ago, and 2.1% increase from 1 year ago. 15-year fix will be sitting at 4.62%. That is 0.03% better pricing than yesterday, 0.28% increase from 1 week ago, 0.78% increase from 1 month ago, and 2% increase from 1 year ago. 30-year FHA will be sitting at 4.80%. That is 0.07% better pricing than yesterday, 0.19% increase from 1 week ago, 0.8% increase from 1 month ago, and 2.13% increase from 1 year ago. 30-year jumbo will be sitting at 4.40%. That is 0.04% better pricing than yesterday, 0.11% increase from 1 week ago, 0.45% increase from 1 month ago, and 1.07% increase from 1 year ago. 5/1 adjustable rate mortgage will be sitting at 4.14%. That is 0.05% increase from 1 day ago, 0.17% increase from 1 week ago, 0.32% from 1 month ago increase, and 1.51% increase from 1 year ago. So what does this all mean? Well, we did take a little bit of a hiccup on the purchase market. Now, the purchase market was highly driven by the low interest rates on the 30-year conforming products. FHA. Those were the big two main buckets, were the 30-year conventional and then the 30-year FHA. Now, accordingly, like if you notice in the whole entire video or in the numbers, the only one that actually has increased was adjustable rate mortgages. Now, adjustable rate mortgages have increased because we're actually selling quite a bit of them, because there's something that is correlated to a purchase market to get you approved, which is called the debt-to-income ratio. Now, the debt-to-income ratio on a 30-year conventional at 5.35, 5.25, somewhere in that area, is going to be drastically different from what we're actually selling right now. And what we're currently selling right now, quite a bit of them, is actually called an 8.6, which means that it's going to stay fixed for 8 years, interest only, and then it's going to adjust every 6 months after that for the duration of until you refinance or whatever you do according to the cap on your product. Now, the total new home sales have dropped by 2.6% as of today, according to the National Association of Realtors. And then, but the permits on building new homes has still steadily has increased. That has actually increased by 0.4%. Now, and I know these numbers sometimes seem like a little bit small, but when you're dealing with trillions and trillions of dollars, a 0.4% increase is massive. It's astronomically big. Consistently, especially as go month over month after month. Now, there is still a supply chain issue when it comes to just getting supplies and building homes and everything like that, but the permits still stay strong. Now, the refinance market, let's just face it, everybody who's supposed to refinance is already refinanced. Refinance market is down the crapper. It is done, it is finished. There's no more refinance market, because everybody who's had a chance to refinance is already refinanced, and the likelihood of the interest rates dropping in the next couple of years is probably not going to be. So if it's not going to happen. But if you currently get into a 5.25, a 5.35 on a conventional, or even if you go into the adjustable rate mortgages, which I honestly advise people to explore adjustable rate mortgages if your debt to income is off and you are still in the market to go out and purchase a home. Because if you are in the market to purchase a home, chances are you're going to be able to get out of whatever you are in the next 8 years. And especially at the rates 8s, 9.6s, 10.6s are going for, it's actually, they're still in the 3s. So if you still want to stay in the 3s, you can still stay in the 3s. So permits have increased by 0.4%. New home purchases actually decreased by 2.4%. That is also based off of a supply chain. It's just, you know, everything has just gotten so stupidly expensive. Inflation is just kicking everybody's ass. Everything is just like, I don't understand, since when did it become so hard to get a bunch of things? And then what was the reason behind? I mean, there's not a lumber shortage. Are these lumber companies holding it? Like, for instance, let's say there's a big builder that's called Toll Brothers. Toll Brothers is actually the house that I bought. It's the one that I'm at. They actually have everything that is on time. And you want to know why? Because they own their own lumber company. So they don't have to worry about a lumber company holding off to go ahead and increase prices, which is it's like one of those conspiracy theories. The inflation on lumber prices is said, and I'm not a speculative man, I'm not saying that it is or it isn't, I'm just saying what, you know, through the grapevine you hear things. So they say that a lot of these lumber companies in the recent is just like, you know, they're feeding you the news and then buying the product, or however that saying goes. So that is where we're at. Interest refinance market sucks. Home permits are still at an all-time high. It's actually at a 16-year high, to be honest with you. That's really up there. New home purchases have decreased, but it's not for the lack of buyers for new homes. It's more the lack of the supply chain. But the new interest rates have taken a big hit, because a lot of these new developers also, they have what's called a preferred lender. Now with their preferred lender, they don't really have somebody that, their company doesn't really do what we do as brokers, right? Big banks don't do it. A lot of places don't do what I do. Now these different types of alternative adjustable rate mortgages, when you go into the 6s, like the 8-6s, 9-6s, 10-6s, when you go to these non-qualified mortgage products with your bank statements, your DSCR loans, whatever loan that we're gonna go ahead and do for you, these are not big bank loans, okay? These are not your every big mortgage company loans. These are loans like I do. These are kind of like broker specific. So hopefully you like the content. If you'd like me to talk about anything, link in the description below. Let me know, or comment below. For up to 50% commission rebate on your next real estate purchase, 0% listing fee, or any mortgaging assistance, link in the description below. Like, subscribe, comment, all that other good stuff. Until next video, guys, I really appreciate you watching. Thank you, and I'm gonna go and take the kids in the pool, because, well, I live in Southern California. I'm in LA. I could do that. Till next video, guys. Thank you for watching.